What's up, everybody? So I'm giving you guys a quick update again on all the charts that we discussed yesterday. So we did have a bloody day yesterday, and we recovered most of that today. So remember, when a bull market and when there's an ETF looming, there's going to be a lot of news that's most likely going to flush everybody out and scare everybody out of the market. Um, I don't want to necessarily go into a tinfoil hat theories about why they do that, but there's a theory that there's a possibility that most of these companies are doing that to flush people out and actually buy it on the low dips, because they know that the masses have front run them. And this is the first time where the hedge funds have been front run by the masses. So it's one theory that's there, that's potentially contributing to these flushes that we have. But when you have so many events that all happening at the same time, you have ETF looming, you have the halvening taking place, you have a bull market, and you have so much liquidity in the market. These kind of spikes, these kind of wicks are expected. These are normal, but it's good to keep in mind as to where some of your technical supports are in case if they do break. That means, okay, maybe you should be extra careful. So one thing to keep in mind as you listen to the charts and watch these charts on your own as well. I'll try to give you guys a breakdown every day, just like 10-15 minutes. But keep an eye on the 50 EMA. 50 EMA has served as a very nice support ever since the low of December from last year. And just like that, yesterday we came down to that 50 EMA, touched it, tested it, and we got bought off. We are running into that resistance again, the one that we rejected off of yesterday, right around that 45,000. So keep an eye on that. We have a decent volume. We had a really bloody volume yesterday, but we have a decent volume coming in, and we got bought off. And now we're kind of, squeezing into that wedge pattern that I had outlined before. Let's take a look on our 4-hour chart for a better understanding of what I'm talking about. Um, okay. So you see that wedge pattern that I have outlined right here. We have this wedge pattern that's been in place, and we have tested it multiple times and bounced off of that. It's been a nice support. So on a 4-hour chart, that's what you were looking for. On a daily chart, you're looking at 50 EMA as your support, and we're squeezing in. What I'm kind of actually expecting is that we're going to do this. We're going to trade in this range most likely, and then ETF gets approved and we break out of there. That's the most likely scenario that I have outlined for myself. So keep an eye on that. It might play out, it might not play out exactly as I outlined, but this is something to keep in mind as we go through these charts. Okay, the next thing we're going to take a look is at Sol. So Solana has been a monster of a trade. And as I expected, we have been trading in this range, in this channel. We broke out of that channel and then we got flushed out. So let's take a look on daily as to where things are. On daily, we have a good support right around that 85. So 85 is your mark. We broke out of that trading range and we're back into it again. So another minor support that we have is that if you throw your fib from the bottom of that candle right here, we have the 50 um, as our support. So watch that Fibonacci of retracement of 50. That's a strong support usually. 50 or the actually, let's see. Yeah, the 50 or the 618. So we bounced off of that 618 a couple of times inside on a smaller time frame, but our 50 fib has been a good support, that's been working pretty well for us. So keep an eye on that and watch the trend. And again, as always, watch the 50 EMA. That 50 EMA has been a nice support trend. We do break out of that and the ETF gets approved. What I'm expecting is going to happen is this. We're going to get up to the top of that range, bottom of that range, get tested, and then off we go. So that's another thing to keep in mind. Also, most of our size have been kind of tapering off and cooling off, which is really good because when your R size are like all the way up high, the likelihood of a move to the upside is very low because you're very overbought. So it's good to have some of that leverage get flushed out of the system before you make your way to the upside, because what that means is that your move has more of a health and the likelihood that it'll last, the move will last for a while, versus when you get bought off on a very smaller time frame and a higher time frame with a high RSI. What that means is that it's over leveraged. People are going to take profits, and what likely is going to happen is that move to the upside will last a very short amount of time. So when you have RSIs that are in like mid 50s and a move to the upside starts taking place, you know that that's a prolonged move and it's a healthy move to um, watch. Okay, the next one we're going to look at Avalanche. Or the reason I'm looking at these is I'm looking at the top 5 or top 10. The rest of the crypto assets are not necessarily something to really keep an eye on because they don't necessarily have the market cap. Some of them are just complete shit coins. There's nothing to it. So watch Avalanche as well. Just like most of the other assets, Avalanche have been respecting that 50 EMA. So it came out of that 50 EMA, bounced off of that really nice. The one thing that I've noticed about Avalanche is watch how this trades. It goes up and trades sideways, forms a bull flag, and then explosive move to the upside, goes up all the way to the 52 or 50, yeah, $50, and then we're pulled back down to that 33, 34, and now we're kind of forming that bull flag pattern that I had outlined before. So what's most likely going to happen is that we'll trade in the side range for a little bit and then do another run of 150% from that. So our next target for Avalanche could be somewhere around, yeah, it could be somewhere around that $70. I do expect that in the bull market we're going to hit that $70, which is about 82% from where we are right now. So keep an eye on that and how this has been trading in that side range. This is a healthy move, by the way. Our size are reset. Remember, our size at 50 or 49 were really elevated, and we were in that elevated RSI mode for quite some time. So it's good to have it retest and cool off, and we're in the mid 50s. So if you were to take a trade here when RSIs were like really elevated, that's a risky trade to take. But when you take a trade around that 40, 45, 50 area, your RSIs are not as elevated, and that means your risk reward ratio is much better to take a trade when RSI is at 50 versus when the RSIs are like 110. So keep an eye on that as your next target. The other thing that we're going to take a look at is say, and these are the trades that I have discussed with you guys before. So I just want to keep everybody aware of what's going on. As I had outlined with say, we were in 40s. So we formed that bull flag, broke out, form another bull flag, breakout. When you look on a shorter time frame to say, it's been a stair step move. We stair step, bull flag, and we break out. Stair step down, bull flag, breakout. Stair step down, bull flag, breakout. So keep an eye on that. This has been a really healthy trend. It's been a really healthy chart as well. When I saw that money come in yesterday, when it flushed out and it got bought off super fast as compared to the rest of the crypto assets, that just told me it was another check on my book to say, hey, money is flowing into say, and they're not just saying things; they're actually supporting their theory or their trade with money that's coming in. And ultimately, money flow decides as to where these charts go. I do have a $1 target coming up pretty soon, actually. So I would not be surprised to get to that $1 and have a retracement back to that 80 cents as our move, and then we'll work our way up from there. So the other thing I want to take a look at is Celestia. So Celestia has been a really strong mover. We just broke out of that top resistance that we had in place for quite some time. So now this is more like a discovery, in my opinion. And because we don't have a whole lot of data available as to determine our resistance, and this has been a very strong mover as well. We moved from November lows all the way up here to 650%. So this has been a very strong mover. Just keep an eye on that. If you were to get into this trade right now, our size are a little bit elevated, not necessarily very elevated, but I am expecting a pullback down to that $14, $15 marks. And then it would not necessarily be a bad idea to take a trade if you believe in the project and you believe in the health of the SEI network. I mean, sorry, Celestia network. So it is a modular network. There's a very strong thesis around that. It's the new trend. It's the new theme in crypto assets because the fundamentals do support it. The money flow supports it, and as you could see, the performance of Celestia in the past few months has been incredible. So that tells you everything you really need to know about this. So watch that 14 $15 as your support. If that holds and bounce off of that, that's not a bad place to get into. If that breaks, then your next target below is right around that $12 mark. So keep an eye on that. If you guys do have any questions, please let me know. I love breaking these charts down. And don't forget to like, subscribe, and share. Thanks, guys.